All right, let's get straight to it. As your Chief Investment Officer, I'm here to deliver a critical briefing. We are facing a completely new reality in the capital markets, a fundamental shift that's going to define everything for the next decade. So I need you to forget what you knew. We are now operating under a new set of rules. Let me be blunt. The playbook that we all used for the last 30 years, the one built on low inflation, low rates, and seamless globalization, is obsolete. It's been torn up. The new game isn't about squeezing out a few extra points of efficiency. It's about resilience, it's about security, and frankly, it's about survival.
Okay, let's break this down. The world we're leaving behind, you see it on the left, that was all about maximizing efficiency. We're now entering a new world, one defined by pressure and the absolute need for security. We're going from seamless globalization to, well, geopolitical fragmentation, from low and stable inflation to a new normal of high and sticky prices. And this is a big one. The deflationary tailwind we got from tech is being completely overwhelmed by the inflationary pressures of a global rearming cycle. We are right in the middle of this transition, and the pressure is building every day.
So what's actually driving this massive shift? Well, there are three powerful interconnected forces that are actively shattering the old global order, and we need to understand every single one of them.
It really all starts with AI, and let's be crystal clear, this isn't just another tech cycle. This is a full-blown industrial revolution. It's an arms race that demands an unprecedented amount of capital spending on hardware, on data centers, and on power infrastructure. It's not about clever code ruling the world anymore. This is about a fire hose of cash flowing into physical hardware.
And the sheer scale of this spending is just staggering. We're talking $500 billion a year. That level of investment builds a fortress around the big tech giants, making it almost impossible for anyone else to compete. But more importantly, it's completely rewiring the global demand for power, for hardware, and for all the raw materials that go into building them.
Now, you layer on top of that the geopolitical shattering of the global system. The simple, elegant logic of the last 30 years, just buy from whoever's cheapest, is broken, permanently. Today, geopolitics, not pure economics, dictates the flow of trade and how our supply chains are built.
First off, tariffs. They are now a permanent part of the landscape. The U.S. trade relationship with China has been structurally dismantled, dropping from 22% of our imports down to just 12%. And that's not a cyclical dip. Supply chains are being forcibly rewired around political allies, which is creating a kind of North American trade fortress. And finally, the peace dividend is over. A new era of what we call conflict capex, capital spending on defense, has begun, as the world rearms for a much more dangerous future. So you take these first two forces, this massive AI spending and the deglobalization, and they feed directly into our third force, structural inflation. And the key word here is structural. Central bank rate hikes alone can't fix this. Inflation is now baked into the system, driven by these deep, physical changes in how our economy actually works.
This chart really breaks down the new inflation regime for us. 40% of it is driven by fiscal activism. Governments are spending on a scale we just haven't seen in generations. Another 30% comes from the direct costs of deglobalization and reshoring. It's just more expensive to build things closer to home. 20% comes from chronic structural housing shortages, and the last 10% from major constraints in our energy grids. All of this creates a high, stubborn floor for inflation.
So with the old map totally useless, the crucial question is this: where is the capital actually going? We have to follow the money.
And this right here is the core of the new strategy. The primary question capital asks has changed. It's no longer about finding the most efficient, highest return opportunity out there. No, investment is now shifting decisively toward hard, strategic, and most importantly, secure assets.
So capital is concentrating in four key areas that provide security, control of resources, and the foundational infrastructure for this new fractured economy. The best way to think about it is like building a fortress. You need secure walls, a reliable fuel source, a powerful command center, and of course a strong defense. This is the new map.
First up, the fortress walls. As supply chains get pulled away from Asia, North America is becoming this self-contained economic bloc. The goal is a reliable, secure supply chain. And this makes Mexico in particular a prime destination for a huge wave of new investment as it becomes a critical piece of this reshored system.
Next, you need fuel for the fortress. In an age that's going to be defined by AI and electrification, well, copper and lithium are the new oil. South America controls these resources. We're talking 40% of global copper production, which makes it the absolutely indispensable resource hub for the energy transition and the AI build-out.
Third, the command center.
We're back to AI, but now from an investment perspective. The insatiable demand for computing power is creating a decade-long supercycle for what we're calling the new utilities. Electricity is the true lifeblood of AI, and our aging U.S. power grid has become the single biggest choke point, which, of course, means it's also the single biggest investment opportunity.
And finally, you have to defend the fortress. That 30-year peace dividend we all enjoyed? It's over. The world is rearming. European defense profits are projected to accelerate dramatically, from about 7% to nearly 20% compound annual growth by the end of the decade. This isn't a cycle. It is a structural bull market that reflects a new, more dangerous world.
Okay, so now for the most crucial point. How do we actually position our portfolios for this new regime? It requires a fundamental rethinking of how we allocate assets.
In a world with volatile structural inflation, the classic 60-40 portfolio is under serious pressure. Why? Because stocks and bonds can and will fall at the same time. The hedge you need, the new stabilizer, is an allocation to real tangible assets. I'm talking about things like infrastructure, energy, metals, assets that have pricing power and protect you against the erosion of your currency's value.
So the ultimate takeaway is this. Capital is getting a lot smarter and a lot more selective. It will flow, with brutal honesty, only to those sectors that have real pricing power, control of critical resources, and undeniable strategic importance. It's going to chase companies and nations that can make the world safer, make industry more stable, and make AI run faster.
And this leads to the final, fundamental question every single one of us has to answer. In this new, fractured world, is your portfolio a relic of the past, optimized for an efficiency that no longer exists, or is it built for the new reality? Is it built for survival?